Okay, so we're going to look at an example and let us use this example to go through this income statement. So this is a profit and loss account, like I explained earlier on. Sorry, get this right. Right. So, I mean, it's called the profit and loss account. I mean, it doesn't matter. You can call it the income statement or the trading profit and loss account. This is the trading section here. Yes. It's an important video, this one. Please focus. This is a trading section. This is the profit and loss account section. You can see the key point is to first of all find gross profit. When we find gross profit, we take away all the other expenses away from gross profit. You can see the layout. We start with sales revenue at the top. We work out this cost of sales relationship. We start with 51. We bought some more for 71, and we take away what we haven't used because we must compare like with like. Yeah, so please look at the other videos where I go on about, if you remember that whole I minus E, but E really in effect must be, we need to take out of E stuff we haven't used and put in A. You can see over here there are no A's. The income statement is purely looking at the letters of I minus E. Alright, so let's look at the scenario here. They want you to first of all work out cost of goods sold. And cost of goods sold or cost of sales, same thing, is the 51 plus the 71 minus the 10. So that's 122 minus 10, which is 112. So that's your cost of sales in this question. And the gross profit is the difference between these two. So it's this take away this. Yes, 236 minus 112, and that arrives. You have a 4 there, you have a 2, and you have 124. That's your gross profit. And what is gross profit? Gross profit is how much profit have we made from just comparing the actual good we sell and the sales from it. These are the direct costs. Purchases, direct costs. And that's just what you had. That's just purchases you had at the beginning. If you remember the video, there's a video just before this, and I talk about that A at the beginning of the next period having to come back into E for the next period because you have it in the shop. You're going to sell it the very next day. So, where are we? Then we subtract, we add together all the expenses. You add all of them together. Let's just quickly see. Here's my calculator. Yes, we add all these expenses. So what we have here, let's just do this because I don't have a calculator right here. So we have 40 plus 15, that's 55. 55 plus 37, that's 12. 55 plus 37, that's 12, and that's 9. Plus 10, that's 2. That's 102. Plus 8, that's 110. Plus 6, that's 116. So all of this adds up together to give you 116. And now, so therefore, our net profit, net means what's left. That's the meaning of net, what's left. So our net profit is the 124 minus 116, giving us 8. So this is what will happen in the next example I do with you. What typically happens is you're given a long list, and you have to pick these out yourself and then create this table together. This isn't given to you. You're given a whole table, and then you have to pick those out, and then you have to remember the order, if you like, to a certain extent of this. When I mean order, just this minus this, get your gross profit, and then take away your other expenses. Okay, great stuff. I'll see you in the next video where we do another example.